Welcome back to the October 2020 real estate market update for the greater Milwaukee area and of course for Ozaukee. Marcus Auerbach here, Keller Williams Realty in Mequon. Today we're going to talk about what's going on in the real estate market, and I'm also going to try a little bit of a forecast how we might be finishing this year in a forecast for November and for December. As you know, 2020 has been a crazy year. As an agent, I have to say, fascinating in many ways. It has presented so many interesting challenges for buyers and for sellers. But overall, it has been a very, very good year. And from all the industries that are still suffering from COVID, real estate has recovered. With my team, I had a record month in August and in September. And the real estate industry in general, when you look on a national level, has completed a very beautiful V-shaped recovery. As I said, not all industries have done that. There's many industries like restaurants, hotels, entertainment that are still suffering very, very badly, and we'll get to this. But the housing market has done a beautiful V-shaped recovery. You can see that here. And we are basically back to where we were before COVID and have even started to stabilize out here on a very high level. When you look at the numbers specifically for the Milwaukee area, you can say inventory is down, but sales are on fire. We're comparing here September with September from last year, and you can see homes just listed is about at the same level. So sellers are regaining or have regained confidence, putting the homes on the market. But what's really remarkable is when you look here, homes for sale, we are down compared to last year in every geographic area. 24, almost 25%. Across the board. So this is the low inventory everybody is talking about. This is homes for sale down about a quarter, which is an unusual quantity. I've never seen numbers like this before. But then when you look at homes sold, we are up 23%, 36% over last year. So with less inventory on the market, we are selling more homes. So it's a really interesting market configuration that we have here. What does that do for pricing? We are coming down a little bit. Last month, we hit that peak here of almost 260,000 median sold price. So this is hard data. We know what these houses have sold for. We hit an all-time record of almost 260 as expected. We came down in September. The spring peak that we usually see in May and June happened this year actually in July and in August. So as expected, last month the September numbers are coming down, but it's still a very strong increase, plus 10.7% in median sold price, increased over 12 months ago. So we've picked up almost 11% on median value. I'm expecting this to decline a little bit further. Usually towards the end of the year, we see the number come back down again. But I think we might be ending this year with a plus 8 or plus 9%, somewhere in that range. The other thing here is looking at days on market. Everybody's always talking about low inventory. And I would like to talk about fast moving inventory, because when you look at how many homes we have sold, it's about the same number of homes, actually a little bit more this year than we have sold in the previous year, over almost 22,000. And so that means the inventory there's not really a smaller selection of homes. It's just that they're not sitting around as long. They're moving a lot faster. And we are at about 30 days here. And historically speaking, if you go back 5 years in a more balanced market, we were at 150, 160 days. That was average, half a year to sell a house. And now many houses are selling in 1 or 2 days. And on average, we're looking at a little bit over 30 days. So we have a very fast moving inventory, not necessarily a low inventory. You just have to be quick because nothing sits around for very long. And the reason that is, you can see that here with the buyer traffic. So it's if you've seen my previous videos, you're well familiar with this chart. The orange curve here is this year's buyer traffic. So we know precisely in Wisconsin how many people are looking at homes. And yes, we're seasonally coming down into September and October, although this looks like we're stabilizing out here. But the big thing is we are still 40% over the already high level of buyer traffic that we have seen in the last year. So even though we're coming down, we're cooling off, don't get the wrong impression, because cooling off means still 40% higher than we were last year. So very strong on the buyer side. Let's take a look what's going on with the sellers. New listings are coming down. So as you look here in the September trend, week after week after week, we have seen fewer and fewer listings hitting the market. We already don't have an abundance of inventory, and so the market increases or it continues to tighten and shrink. So still a very, very good time to bring a house on the market, because we have, as you can see, very strong buyer demand, and we are headed down with the inventory, contracting inventory. Let's take a look at some national unemployment data. This is the big trend everybody's worried about, and we thought that this may have a big impact on the real estate market. People were talking about a potential housing crash and foreclosures. So I'm monitoring this data every month very, very carefully. I'm giving you just the abbreviated version here, but here's the big picture. In April, we had an unemployment rate of almost 15%, and we were in a deep, deep recession. And every month, the unemployment rate has been recovered. Experts have said there is a core unemployment rate of about 6%. It will be very tough to get through that. That's going to be entertainment, restaurants, etc. So there's jobs that are going to be very difficult to gain back. But many other sectors in the industry have already recovered, and you can see this here in the unemployment rate. Wisconsin, by the way, is doing quite a little bit better than the average of the US. We are here at 6.2% for September, so quite strong economy and labor market for Wisconsin. Let's take a quick look at consumer spending. So that completely crashed, of course, in April. You'll remember the economy, consumer spending, broke down almost by a third. And you can see the same picture here. Consumer spending was down in every month ever since, but it has been improved every single month. And especially September is interesting because it has shown a much stronger impact than the unemployment rate. You can see the change here from August to September has been almost cut in the minus has been almost cut in half. So we are not far away from where we have been before COVID. So this is very, very promising. And this explains also a little bit why we have a good market in Wisconsin. Look here, a change of consumer spending since the beginning of the year. And you can see that Wisconsin with minus 4.7 is doing, not so bad. We're the Midwest, so we're basically in the middle. But compared it with some states out west here that are like almost 15% in the hole, some other states are doing better than we have, but overall, we are holding ourselves pretty well here with. So part of the reason why the economy is not doing so bad in Wisconsin is the V-shaped recovery of the real estate industry. That has a very strong impact overall on the Wisconsin economy. You have here a study from the NAR. This is Wisconsin data. And you can see that the real estate transaction has a total economic impact of about $73,000 on our local Wisconsin economy. And you can see the breakdown here. So that's not only the transaction itself, but then there's also remodeling cost, and there's also related expenses. You might be buying new furniture, and there's also new construction. So it's the real estate recovery is really helping the overall economic recovery. It's like leading the economic recovery. When you look, for example, at what's going on with builders and what's going on with new construction, the builder confidence score has hit an all-time high in September. So they have, of course, a National Association of Home Builders, and they are surveying the builder confidence score. And don't think of all builders as small mom and pop shops. We have some very sizable builders in Wisconsin, and there are also some national players that are traded on the stock market. And so they take a very, very professional approach on planning what they are doing, and they're trying to guess, when they're buying land, developing a subdivision, that has 1 to 3 years lead time. So they're trying to take an analytic and very educated guess on what the real estate market is going to be in the years to come, because otherwise they're going to be stuck with an empty subdivision. And so builder index is on a record level at 83. When you break it down into the categories, we are kind of in the middle there in the Midwest with plus 9 points. We're at 72, and you can see it locally. I drove 4 new subdivisions here in Mequon and in Cedarburg last week to take a look at what's going on and see that firsthand. And builder confidence is very, very high. Of course, we have a housing shortage, so one of the solutions, of course, is to build more houses. On the other hand, what's the negative impact that we might be seeing on the real estate market? Forbearance, mortgage forbearance are definitely a concern. And just a quick refresher, mortgage forbearance is when you talk to your bank and say, hey, I'm worried that I'm losing my job because of COVID under the CARES Act, and can I not pay my mortgage for a period of time? And so we had almost $5 million mortgages enrolled into forbearance programs. And they are, of course, very carefully tracked. And what we can see is that every month the loans that are currently in forbearance are reducing. And one of the reasons why I'm not too worried about loans in forbearance and becoming foreclosures next year is because homeowners have an option before they go in foreclosure, which will ruin your credit forever, 7 years at least. You have the option to take that house and put it on the market and sell it quickly if you have equity, which a lot of people didn't have in 2007, 2008. So what's the equity situation that we have currently? If you look here on the color coding, so these two skin tone colors are under 10% equity and 11 to 20% equity. So that's in the pie chart here, these two groups here. Everybody else has at least 20 to 40, 60 or more percent equity in their homes. So anybody who is green or blue here in this chart can very easily avoid foreclosure after the forbearance, because they're just going to put their home on the market, they're going to sell it, and they're going not only to pay off their mortgage, but they're also going to walk away with a check and can start over again and not having to foreclose on their property. So interest rates are looking favorably for the real estate market for the balance of this year and also for next year. Let's take a look at some other metrics. These are some of the numbers that I study every month, and we are dividing them in two groups here. We have lagging metrics and we have leading metrics. What's the difference? So a lagging metric is when you step on the scale and you see what your weight today is. That's the result of what you have done previously. If I measure how often I go on the treadmill this month, that is a lead metric, because that will tell me that if I run every day, then I will probably have lost some weight next month. So we're looking at some lead metrics here, and as you can see, as these lead metrics have been improving throughout the summer, then the lag metrics have been improved in the next month as a consequence. And when you look here at September this year versus last year, you can see that we are showing some very favorable number on the lead metrics, and based on that we're expecting also a very strong October and most likely a very strong November and December. So fall and the finish of this year, Q4, should be probably the strongest real estate market that we have seen maybe ever, because we have seen this shift this year with COVID. Everything happens later this year. So here's a little bit of an outlook what to expect here. So most likely we will see the strongest fall market on record, just because how everything has shifted this year. Inventory is shrinking a little bit because of the seasonality. We're going into fall season. In a couple of months we're going to have holiday season, so that's always bringing inventory down a little bit. But we have low interest rates and we have re-established confidence in the real estate market. And the combination of both, that is creating a very, very high demand. It's going to remain tough competition for buyers. So most of the listings that we have had in the, this year, especially in the last few months, have been with multiple offers within 1 or 2 days. So that's going to continue this way, and buyers will have to write very, very strong offers, which is also going to continue to drive prices up. However, I think that the extremely high price levels that we have seen in August, I think that is going to come down a little bit, and we're going to finish the year a little bit more tempered with maybe a +8 or +9% increase in median sales price. And the sales volume overall will remain high as inventory permits. So as inventory is coming on the market, it's going to get absorbed, and we're probably going to see that throughout the balance of the year. And we should have a very strong market for the rest of the year. So hopefully you had some good takeaways from this video. I would love it if you subscribe and stay updated with all things real estate for the greater Milwaukee area. You may have noticed that this video is a little bit shorter than they usually are, because I've always buried a bunch of other topics at the end of the market update videos. And sometimes people are not watching to the end, so I will break that out and I will post separate videos on specific topics. Like last month, I was talking about the impact of millennials and how the demographic shift is causing our inventory to shrink. So going forward, I will break those things out in a separate video. It makes them easier to search and easier to find. So subscribe, then you will stay updated on all things real estate for the greater Milwaukee area. Thanks for watching, and I'll see you next time.